There is a government form that a significant number of Americans receiving Social Security have never filed. It is completely free. It takes about 10 minutes. For the people who submit it correctly, it results in a larger monthly benefit, starting as soon as the adjustment is processed. A larger check for the rest of their lives. I have seen people add $200, $300, even $400 every single month. Stay with me until the end, because the section almost every senior skips is something almost nobody explains clearly. Before we get into it, subscribe and hit the bell. The rules change constantly, and the SAW does not send you a personal explanation. The people subscribed here find out in time. The ones who are not find out after the wrong decision, after the missed deadline, after the money is already gone. Hit subscribe and let us get into it. The form we are talking about today is called the SA-44, the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. It is free, it lives at ssa.gov, and if you have never filed it or even heard of it, you are not alone. The SAW does not advertise this form, and most financial advisors never bring it up. Here is why this form has the potential to add hundreds of dollars back into your monthly income. And I want to explain this clearly because it is the part most people do not understand. If you are on Medicare, you likely know that Medicare Part B and Part D have monthly premiums. What most seniors do not know is that those premiums are not the same for everyone. The SAW uses a system called IRMA, Income Related Monthly Adjustment Amount, which means if your income crosses certain thresholds, your Medicare premiums go up significantly. Here is where the problem begins. The SAW calculates your IRMA surcharge based on your tax return from 2 years ago. So in 2024, they are looking at your 2022 income. If something happened in your life in 2022 or 2023, a job loss, a retirement, a divorce, the death of a spouse, and your income dropped substantially, the SAW does not automatically know that. They are still charging you based on old higher income data. According to the Social Security Administration, the IRMA surcharge for Medicare Part B alone can add between $69.90 and $419.30 per month on top of the standard premium, depending on your income bracket. That is between $838 and $5,031 extra per year. Over a 20-year retirement, that adds up to between $16,760 and $100,620 coming directly out of your pocket. And here is the part that makes this genuinely frustrating. The SAW does not find these overpayments for you. There is no automatic review, no alert, no letter that says your income changed. Let us recalculate. The surcharge gets applied, the premium gets deducted, and unless you file the SA-44 yourself, that money keeps leaving your account month after month, year after year, without anyone flagging it. Who is most likely to be overpaying on Medicare premiums right now? 1. Recently retired seniors. If you retired in the last 2 years and your income dropped significantly from your working years, the SAW is almost certainly still charging you based on your pre-retirement income. The SA-44 is specifically designed for this situation. 2. Widows and widowers. The death of a spouse often results in a dramatic drop in household income, but the SA's 2-year lag means they are still calculating your IRMA surcharge as if your former income level still applies. Filing the SA-44 corrects this immediately. 3. Divorced individuals. If a divorce significantly reduced your income and you have not notified the SA through the proper form, you are overpaying on Medicare premiums right now. This is one of the most overlooked situations in the entire benefit system. 4. Business owners who closed or sold. If you sold a business, closed a company, or had a significant reduction in business income in the last 2 years, that income spike or drop may have triggered an IRMA surcharge that no longer reflects your actual financial situation. 5. Seniors who experienced a pension change or work stoppage, any reduction in work or pension income that the IRS has not yet reflected in your most recent tax return is a qualifying life event, and the SA-44 allows you to report it directly without waiting 2 years for the tax cycle to catch up. Here is a real example of what this looks like in practice. A woman who worked as a regional manager for a manufacturing company retired in early 2022. Her income that year was still relatively high because she worked through March. By 2024, the SAW was charging her an IRMA surcharge based on that 2022 income, even though her actual retirement income was now much lower. After her daughter looked into it and helped her file the SAW 44 with documentation of her retirement date and reduced pension income, the SAW recalculated her premiums. Her Medicare Part B and Part D surcharges were removed entirely. Her net monthly benefit increased by $347 every single month for the rest of her life. She had no idea that money was sitting there, being taken from her every month, until someone actually sat down and walked her through this form. So, here is exactly what to do. Step 1. Go to ssa.gov/forms/SSA44. Type that URL directly into your browser. Download the SA44 form. It is a PDF you can fill out on your computer or print and complete by hand. Step 2. Identify your qualifying life event. The ESSA 44 covers 7 specific life-changing events: marriage, divorce, death of spouse, work stoppage, work reduction, loss of income-producing property, and loss of pension income or employer settlement. Find the one that applies to you. Step 3. Gather your documentation. You will need proof of the life event, a retirement letter, divorce decree, death certificate, or similar document, along with a copy of the most recent tax return or other evidence showing your current reduced income level. Step 4. Complete the form carefully. Fill in your Medicare beneficiary identifier number, your full name, and the tax year you want them to use instead of the 2-year-old return. The form is straightforward, 4 pages, clearly labeled. Step 5. Submit to your local SA office. The SESA 44 cannot be submitted online. You must mail it or bring it in person to your nearest Social Security Administration office. Bring copies of everything. Ask for a receipt or confirmation of submission. Insider tip: here is something most people do not know. If you do not have your original retirement letter or income documentation, your HR department, pension administrator, or former employer is legally required to provide that record upon request, usually within 30 days, and at no cost to you. So even if you do not have your old paperwork right now, that option is available. Most people spend more time researching a new television than they have ever spent reviewing the government documents that determine their income for the rest of their lives. The SSA 44 takes about 10 minutes to complete. But for the people who qualify, and if you had any significant income change in the last 2 years, you very likely do, those 10 minutes could recover hundreds of dollars every single month for the next 10, 15, or 20 years. Go to SA.gov/forms/SSA44. Download the form, identify your life event, attach your documentation, and submit it to your local SAW office. That is the whole thing. The only thing standing between you and a larger check is filing a form that most seniors have never been told about. Subscribe. Share this with someone you know who is on Social Security or Medicare, or anyone approaching retirement age who needs to hear this.